Hey everyone, this is Nathan with Dividend Growth Machine YouTube channel, and today I wanted to talk a little bit about the Berkshire Hathaway Annual Meeting for 2020, three of the main highlights that I took from that. And I think there's a lot that's been covered on this, and most people are focusing on what Buffett did, what actions he took, the airlines. Everyone knows he cut his airline holdings, but what I want to do is focus on the three what I would call takeaways that would last forever. Essentially, what are the nuggets that we can take from Buffett that we could apply to our investments for the rest of our lives? People get wrapped up in doing what Buffett is doing, and I think that's fine in and of itself. But I think the essential thing to do here is to take nuggets from some of the best investors of all time. Buffett is obviously at the top of that list, or at least in the top few. Take those takeaways, apply them to your own investment strategy. Don't just copy someone else's investment decisions. Take what he tells you and apply that to your own portfolio. So I want to get three items that I think we can all apply here. And this is something that I think is really important for us to do. So I'm going to start out here with this first point, which is buy like a farmer. And Buffett talks about, if you bought a farm and, you would be buying it based on the corn that it produces or the soybeans that it produces. You would not be buying the farm based upon the price of the farm. So he gives the analogy that you've got. So this is you, and there's a guy that moves in, buys the farm next door. And this guy, we'll call him person B. This is your neighbor. This is you. Person B is going to give you a quote every single day. He walks over and he tells you that he's going to pay such and such dollars for your farm. And this would be extremely advantageous for you because if he offers you a lot more money than your farm is worth, well, then you can take him up on the offer, and that benefits you. If he comes in and offers you, say you paid $1 million for the farm, and say he comes in and he offers you $800,000 for it, and you thought it was worth more than $800,000, well, you would just tell him no. You would not feel emotionally worse off because he gave you less money than what you paid for it, or there was some reason why he offered you this amount of money, but you wouldn't feel psychologically damaged. But with stocks, we don't do that. Most people think of the market giving them quotes every single second. They think that they have to have an opinion every single second, and they feel psychologically worse off because the market value of their portfolio went down. And that's not how Buffett thinks. That's not how you should think as an investor. You should be thinking about the bushels of corn or whatever soybeans that the asset is actually producing. That's what matters to you as the investor. And he also made a couple points about, he didn't know what the market would do today or tomorrow or the next day. No one knows what's going to happen over the next week, month, even year. And if Buffett is saying that, then you can bet for sure that nobody else really knows. So the takeaway for me is stop watching CNBC, stop listening to all the news out there that's saying, stocks are going up, stocks are going down. The point is, how much are the businesses worth that you're going to be buying? Are you paying less than or equal to the fair value of those businesses? And are you getting an adequate rate of return on that investment? That is what matters. And then another point he makes later on, he talks about he talks a lot about the psychological effects that the stock market has on people. And he said if you make an investment and you're not willing to watch that drop by 50% or more, you have no business in the stock market. And he cites that there's been 3 instances where Berkshire Hathaway stock has actually declined in value by more than 50%. So 3 instances over the past 40 years. That's a lot of time. And so anyway, so any stock you buy, if you can't handle it psychologically dropping by 50% or more, then you have no business buying that company. You have no business investing in stocks. Number 2 point is the return on invested capital is Buffett's most important thing. And if it's not his most important thing, it's got to be up there. He talks about this all the time, and very few people really pull this out. And so he talks about how an ideal business is a business that does not require any capital in order to grow. So if you think of a snowball. So a snowball starts out pretty small. You have a snowball, starts out small, and over time it grows and grows and grows and grows. So this is the kind of business that Buffett really likes. It's a business that he can put a chunk of money in. So say this is $1 million, or for him, $1 billion. He's putting $1 billion into this business, and it's going to grow those cash flows for him over time without him adding more capital, or in our example, more snow. So you want to buy businesses that you just put money into them and then they grow forever, no extra snow required. A decent business is one that for every bit of snow you put in there, it will generate some percentage of additional snow per year. But these companies are not as good because each one of these snowballs that you buy is only producing a fixed amount of snow each year, a fixed return on that investment. In order to grow the snowball, you have to add more and more and more snow. A bad business, which is what he's saying the airlines are at this point, is a business that is going to consume capital. It has no rate of return on those investments. You put money in and it's shrinking that money down over time. The capital is not productive. That's a bad business. And then finally, beating the S&P 500 is extremely difficult. So one of the questions was, Berkshire Hathaway, why has it underperformed the S&P 500 over time? And Buffett basically says it's extremely difficult to beat the S&P. He doesn't guarantee that Berkshire will be able to do it. And that just, should make it very clear to you that the S&P 500 is difficult to beat. You should not think it's going to be easy for you. If that's your goal, to beat the market, you're not going to be able to do that unless you're making superior investment decisions than even Buffett himself. I mean, you have got to be the elite of the elite to beat the market. And it's very difficult to do. And most fund managers, simply cannot do it. Few actually do it. He did say something here that I thought was interesting, that small sums of money have a better chance than big sums of money. So, if you listen to his full transcript, he's talking about how Berkshire Hathaway today is a $500 billion company. So it's difficult for them to make smart investment decisions because that actually move the needle. So if they're able to find a $50 million company, that's an extremely good deal and that's going to double overnight, they're only going to make $50 million on that investment, which 50 million divided by 500 billion is, 0.0001%. It's extremely small for the average, or for Berkshire. For you, however, if you could find a $50 million business that was going to double overnight, you can put in, whatever amount of money that you have, and that's going to double. And that is going to dramatically move the needle for you. It's just that for him, it's not going to actually do anything because he has such a big pile of money that he's managing. So anyways, those were some takeaways. I'd like to come up with a couple more and publish a higher quality video than this, but it's as much as I can get on the live stream. So hope you guys liked this, and if you did, I'd appreciate a like if you liked the video. If you want to get more content like this in the future, hit the subscribe button. Love to have you guys as part of the group here. I'll try to do as best I can to give you high quality analysis backed by real logic that can help you guys make better decisions for yourself. So thanks for joining me, and hope to see you guys the next video.